Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesale and Electrical Marketing, with episode number 119 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit fittings in 1988 and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. In episode 119 of this podcast, we'll be looking at the first quarter 2025 electrical market business conditions survey done by Electrical Wholesaling and the Vertical Research Partners Equity Research Firm. We'll also be checking out the latest data from Electrical Marketing Newsletter's Electrical Price Index. In addition to this, we'll be giving you some updates on several key weekly economic indicators to track: initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to the folks from Champion Fiberglass for sponsoring this podcast for more than 100 episodes over the past 4 years. For the week ending April the 12th, the advanced figure for seasonally adjusted initial unemployment claims was 215,000. That is a decrease of 9,000 from the previous week's revised level. The 4-week moving average for these claims are 220,750. That's a decrease from the previous week's revised level of about 2,500 claims. The unemployment claim did rise slightly in March to 4.2% from 4.1% in February. 5 states had a decrease in unemployment of at least 1,000 for the week ending April the 12th. Those states are California, with its claims down 2,750, now standing at 43,886. Tennessee saw its claims drop 2,615 to 2,857. Oregon's claims were down 1,425, now standing at 4,947, and Wisconsin was down 1,325, its claims now 3,519, and Illinois was down 1,318, claims standing at 9,297. 6 states had increases in unemployment claims of more than 900 employees for the week ending April the 12th. Kentucky was up 4,306 claims, its claims now standing at 6,605. State of Missouri was up 2,002 claims, total claims now at 4,945. Pennsylvania's claims up 1,768. Connecticut up 984 claims. Michigan up 967 claims. And New York up 946 claims. One of the more interesting leading economic indicators for the overall U.S. economy is freight rail traffic. It measures the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR. It publishes this data weekly at www.aar.org. I find this data particularly interesting right now because we're trying to get a sense of the impact of tariffs on the overall U.S. economy. And since this data is published every week, and it has been published since the tariffs were announced, we can get a sense of which way the U.S. economy is being impacted. So far, the good news, as we'll see in the data, the good news is that there has been very minimal effect so far of the tariffs on freight rail traffic. For the week ending April the 12th, total U.S. weekly rail traffic was 491,908 carloads and intermodal units. That's up 5.4% compared with the same week last year. North American rail volume for the first 15 weeks of 2025 was 10,051,332 carloads and intermodal units, and that is up 33% compared with 2024. You can see the strength in some of the major freight categories, with intermodal categories, the largest single freight category, also being the strongest. It showed at 8.3% over this time last year. Again, intermodal units are basically those containers that you should be shipped on the back of trucks. You see them on freight trains and also on container ships. And also, so very, very positive indicator to see that those are still up so much. Other individual freight categories that are up very good. Grain up 3.8%. Farm products excluding grain and food up 2.6%. Chemicals up 2%. On the negative side, the only one that was down fairly significantly was metallic ores and metals. That was down 4.6%. If you track the oil market, you're probably familiar with the Baker Hughes rig count. It tracks the oil and gas rigs that are operating in the United States. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. Very little change in the Baker Hughes rig count over the past week. The total change was 2 rigs, 1 for oil and 1 for gas. Total rig count of both gas and oil rigs stands at 585. That's down 34 rigs from last year for a 5.5% decline. Pennsylvania was the only state in the most recent data showing movement. It had a 2-rig increase. While we haven't seen much change in the Baker Hughes rig count over the past couple of weeks, we've seen a lot of activity with oil prices, and specifically the one we track for the U.S., the West Texas Intermediate Crude, or WTI. The current price for WTI crude oil as of Friday, April the 17th, was $64.68 per barrel. The WTI has spent 24 out of the last 28 days below $70 per barrel. It had a very strong run over the $70 mark, and generally speaking, over $70 marks means all oil producers are making good money when they're hitting that kind of price. Economists like to call copper pricing Dr. Copper because it's the leading indicator for future economic activity since copper is used in so many businesses. The construction industry is among the leading markets for copper because of its use in wire cable and copper plumbing pipe. The current price for copper as of April the 18th is $4.71 per pound. Historically speaking, that is high, but maybe not so much when you looked at just late in March, we were up to $5.24 per pound, and that copper prices had rallied 30% over year to date. So, and they are currently copper prices, they are lingering below $5 per pound, although they rallied off their recent bottom on April 8th. On April 8th, they were down $4.10 per pound. When you think of that April 8th again, that was the low. The high just a couple of weeks before that was $5.24 per pound. So very, very volatile for the copper market. My favorite projects for electrical wholesaling now is the quarterly survey on electrical market business conditions that we do with the Vertical Research Partners equity firm. We survey full-line distributors, industrial distributors, and utility distributors to get their take on what business conditions have been over the past quarter and what they look like in the next quarter. Now, over the past quarter, and again, this is looking backward before March 30th, so we're not capturing a lot of the tariff impact, but conditions were good. Total for all three distributor groups up 2.7%. That growth is on 0.4% volume growth and 2.3% price growth. The overall result was consistent with the average growth seen in 2024 and the 2024 exit rate, though the components of growth flipped sequentially with price picking up and volumes decelerating, according to Nick Lipinski, the VP and equity analyst for VRP. VRP also said that in the survey that the general pickup in pricing reflects some early tariff-related movements from OEMs, and with another leg higher expected in the second quarter of 2025 as the broader swath of tariffs take hold. The growth in Q1 came shy of the approximately 5% level that distributors had been anticipating, but they had forecast in the Q4 survey in January. Some distributor contacts called out unfavorable weather in the past quarter as a weight on the volumes. The 2-year growth stack expanded at 30 basis points sequentially to 5.9%, and that's over the past 2 years, going back to 2023. By category, electrical distributor sales were the most robust, more than utility and automation products in the first quarter, up 5.8%, on solid contributions from both price of 2.6% and volume 3.2%. Electrical distributors are also the most optimistic for the next quarter, and they are looking at 6.7%, so that's pretty darn good, I would think. 2-year growth stack for electrical distributors in the report, and it's accelerated to 8.5% for the past 2 years. We're going to take a look next at some of the verbatim comments the distributors gave us in that survey. As I mentioned before, electrical distributors averaged a 5.8% increase in the first quarter. For the second quarter, they're looking at 6.7% increase. Data centers continue to be a primary driver of activity, according to our respondents. And on the energy front, respondents saw renewables, particularly solar, as being de-emphasized in favor of LNG projects, so the engineering talent for these projects is a constraint. Institutional construction markets were solid, with particular strength in healthcare and specifically hospital labs. University spending is offsetting a softer kindergarten through 12 or K through 12 educational market. Also saw some strength in residential construction in multifamily housing outside of California and Illinois. Along with those general comments on the overall direction of the market, I get a particular kick out of the verbatim comments from distributors on what they're seeing. And there's some great ones over in the past survey. And here I'm just going to run through some of my favorites. Tariffs are a wild card. Some vendors have raised prices April 1st, others are holding off. Another, tariffs are having a short-term impact on pricing. Decisions are getting delayed pending what will be the outcome. Lots of quotation activity, but none of it generating sales. I don't see us changing forecast or budget in 2025, but if we have these tariffs still in November, 2026 gets murky. I do think some manufacturers are facing pushback on price. Lots of poker games going on. We had a terrific Q1, prices going up and people order ahead, though through mid-April we're booming, but it will slow. I think we're taking some orders from inventory that's not tied to market demand. Long-term view is generally optimistic despite the short-term friction. And our last comment, haven't heard about major price increases yet. 5 years ago, it felt like every other day there was a 10% to 20% increase. And 5 years ago, I assume it's referring to the issues with the COVID. Electrical Marketing's Electrical Price Index, or EPI, showed some increases in March, but it is backward-looking and is not yet incorporated to any large degree, I believe, the impact of tariffs. The EPI was developed by Electrical Marketing and SPI Global Insight back in the 1990s first to monitor price movement on more than 20 electrical stocks. We'll hit some of the highlights here in the EPI in this podcast, but you can get all the monthly data as well as downloadable historical data back to the 1990s for only $99 annual subscription. We're going to look at some of the electrical product categories that show the biggest increases compared to the overall index. Total electrical price index for those 20 plus categories for the month up 1.1%. Circuit breakers showed a very large increase over that at 6.8% for the month over February. Panel boards and switches up 4.9%. Industrial controls up 3.5%. Building wire and cable up 3.3%. Switchgear up 2.6%. Power wire and cable up 2.2%, fuses 2.1%, and lamps down showed just a fairly large down. Of the only major products down was down 2.1%. We'll take a look next at the year-over-year changes. All right, let's take a look at some of the largest year-over-year changes. Total index year-over-year up 3.4%. Circuit breakers way outpacing that at 11.5% increase. Building wire, always a volatile category, but up 9%. Panel boards and switches up 8.1%. Industrial controls up 7.9%. Fuses 6.2% increase. Switchgear up 5.4% compared to March 24 a year ago. Power wire and cable up 5.2%. Two products showed some fairly large declines. Boxes were down 4.7%, and pole line hardware for the utility market down 7.1%. That wraps up our podcast today. Again, a special thanks to the folks from Champion Fiberglass for sponsoring today's Electrical Economy series over the past 5 years. Can't believe we've done over 100 of these podcasts, but I enjoyed every one of them, and I'd like to thank Champion for sponsoring them all. Please contact me if you have any questions on any of the type of data that we've discussed in the podcast today, or if there's some different data that you'd like us to be covering in some other podcasts coming up. I mentioned electrical marketing in the podcast in regards to the pricing data that we publish each month. And again, it's available as part of a $99 subscription. To get information on subscribing, go to www.electricalmarketing.com or contact me directly at jlucy@endeavorb2b.com. Our next presentation will be on May the 5th. And until then, stay healthy, be happy. Look forward to talking with you then.